All right, guys, what's up? Alec back with another stock market investing video. Today, we have one of the most anticipated videos on the channel. Everyone always wants to know and is asking me, what are options? How do I trade options? I don't know anything about them. Who are they for? And, can I make some good money trading options too? So we're going to answer all those questions today. I'm going to take you through exactly how to sell them, how to buy them, what's included, what you need to know that's important, and some tips and tricks on selling and buying options too. Click on the stock you want to trade options for. Apple's a good one, and I'll tell you why you want to, you don't really want to trade, especially Tesla options in the beginning, and why Apple's better for a beginner as well. So you press trade and then trade options, you'll see right here. If you don't have this screen popping up, then you have to enable options on your Robinhood. So once you enable it, go ahead and press trade options, and don't worry about pressing like I think it's going to go up, I think it's going to go down. That doesn't matter. And then you can actually read some of this stuff too, so you can understand a little bit more about buying a call, buying a spread. But in short, the first thing you do at the top, you see September 25th, you see October 2nd, October 9th. You pick your date first. So whatever date, it's always better to do a little bit out. I like to do at least a week or two out. And what you'll see, let's just say we pick September 25th. What you'll see is share price right there. It says share price 107. That's how much Apple is going for right now. And what we want to do is a put is going to be if you think it's going to be going down. A call is going to be if you think that the stock's going to be going up by September 25th. So we think it's going to be going down by September 25th. So what you would be able to do is you can actually see a few different things. So you see share price 107. It's always make sure you see that. And right here, you'll see 107.5 put. So it says to break even 3%, right? Negative 3%. Break even $104. So far, these are the most important things to look at is the September 25th, or you can pick October 2nd if you want, or October 9th, whatever you want to pick. So you pick your date first, most important, and then you see the share price, what it's at now, and then you can actually look at the break even after that, right? So to break even, you need negative 3%. You need negative 3.7%. So whichever one you want, look at the 103, the break-even price. So let's just say we want to do the put. We think it's going to be going down 3.7%. So we click on this one, and then we can when you buy one contract, it's automatically going to do 100 shares. So that's the least you can buy. The max cost is at least $233 you're going to have to pay. Right? So you got to make sure you at least have $233. That's actually a small amount when it comes to options. If you go to another one, like let's just go to Tesla, for example, because I know a lot of people are going to want to trade Tesla, especially on options. So we'll go here, Tesla, and you press trade. Let's trade options. Pick our day, September 25th. Let it load. Look at that. So these ones are a little bit more that's saying negative, you can scroll up because you see like down here, it's negative 5%. Let's just say we only want to do negative 1%, 1.5%. So you would click this one and you would buy one. That's already $13,000 minimum you would have to pay. So you see how much difference it is with you trying to trade Tesla? Even at the very minimum, the $39 one, you click it, one is almost $4,000 already, just when you're trying to trade an option. So on the right over here is what you'll actually see the price you're going to be paying. And remember, per share. And remember, you have to buy 100 of these shares when doing options. Okay, so the first thing you want to do is analyze the graph. And you want to see what you're going to predict. So you see Bank of America has a little uptrend here going. So it's probably going to keep going up, keep extending. You want to read your graph and really get knowledgeable with graphs when you're going to be doing option trading, because you have to predict where the market's going to be going. So what you would do is you press trade options. You press your date, September 25th, October 2nd, whichever one you want. October 2nd is very safe. So that's why the shares are so much more on October 2nd, because it's safe. You know, here, like this one, you know, to go up 2%, Bank of America by September 25th, it's like nothing. It's $37. So you can buy 10 contracts if you wanted with Bank of America. So it's pretty safe. When you're looking at October 2nd, if you think it's going to be going up 3% by October 2nd, it gives it a whole nother week to go up that 3%. And remember, you can always sell anytime before that as well. So you don't have to sell on October 2nd. You can sell on September 25th as well, but you're not just going to get as much of a percentage. So let's do 2 options right now so you guys can see in action how they work, like I'm going to be doing it myself. So October 2nd, we're going to do a nice easy one. We're going to say Bank of America is going to go up 3%. We need $26 a share and 9 cents to break even. And let's do it for 2 contracts, right? So let's review it. Let's buy it. Let's go. So how contracts work as well, you can see I average cost right there. I bought it for $1.60, and then you can see the current price is $1.63. So remember, you have to buy 100 shares when you buy a contract of it. So I made $3. It went up 3 cents per share, made $3, right? So if it goes up, for example, this morning, it was up $2.10 a share. So I would have made $40, $50, $50 from that. And if you go view the cake, it was only up 3%. And you would have made 31% instead of the 3%. So that's the good thing about options. It's really leveraging it. You have to really, really know what you're doing. You have to be able to look at a stock and say, oh, I can see that this stock is going to be going up 3% in the next 1 to 2 weeks. And because you can lose money just as quick. So for example, if this starts going down, Cheesecake, you'll actually see my shares going down very quickly. And instead of 3% up, I can be 3% down just from a little point something movement. So here we see Cheesecake starting to rise. We're at 0.7%. So we'll probably see my shares starting to rise. There it is. I'm up $5 now. So that's how easily this stuff, it's very volatile. So you have to be on top of it, and you have to be basically glued to your computer screen. Some people will buy it and sell it within the same day, because you don't have to wait till your expiration date, which mine's October 16th. You don't have to wait to that time. I can sell, if I wanted the $5 profit, I can sell right now and take the $5 profit. But obviously, I'm going to wait for at least like a 20-30% gain on this position, and then cash out at that point too. So I hope that explained options pretty well. It's very straightforward. Don't overcomplicate it. Just to recap, you press trade options, you press your date, October 16th, and then you can kind of see your break-even price. You can put call or put. Put means you think it's going to be going down. So always look at to break even. That means so if I put that one, the first one, it says to break even 6%. That's the first thing you want to look at after you pick your date. So I think it's going to go down 6% by October 16th. So if you think that's true, you would click that one. If you think the one above it's true, I think it's going to go down 1.5% by October 16th, you can choose that one. But it's going to be more money because it's easier bet. This is a little harder bet, so it's only $230. This one, $600. But it's a pretty easy bet if you really believe that this stock's going to go down. It's 1.5% by October 16th. So if you're that confident and you know the stock market or if you have some privy information that you know it's going to go down a little bit, go ahead and click on it, buy it. But remember, you are risking $600. And I also want to go over the losing money too, how that works. So it's not like you're just going to lose all your $600. It's going to go down slowly. So if we go back, so if you don't hit your target, it's not like you miss out. You lose out on all your money. It wipes to zero. You lose out on your $600 that you put in. You're just going to see it go down slowly. So if you want to set a stop loss of like 10% or 15%, that's always a good idea too when doing options, so you don't lose too much money. But if you're that confident, like this one, it's going to go by October 2nd. So just because I'm down 10% right now, all I need is Bank of America to go to $26.12, and I'll be making money. So I just needed it up a little bit. You know, we're talking about a few percent in a week. So I'm going to hold it. I'm going to hold it for as long as I can till I possibly can make my money back. So here you can see the cheesecake one we were talking about. Remember, I was up $5. Now I'm already down $7. So it goes quick. Guys, I'll keep you updated on how these calls do. We'll scroll down and we can kind of see the return. You know, this one's till October 16th. My other one's till October 2nd. So we'll check up and kind of post on how they're doing and everything as well. And yeah, if you like the video, guys, drop a thumbs up. It is for more advanced people as well. So again, trade, view all options, click your date, and then you look at your to break even, and you can see what percent it is. I think it's going to go down 1.37% by November 20th. So that's it. You would click it, you would buy one, and then you would hold it. That's the whole thing to options. You're basically predicting the market. You're guessing it's going to go down 1.3% by a certain date, by October 16th, by November 20th. But you can always cash out before that date too. You don't have to wait until that date. If it goes up to 1.3% or 2%, then go ahead and cash out early and take your profits. There's no harm in that as well. So guys, if I summed it up and I made it easy for you, drop a like on the video, leave a comment, let me know what you want to see next. I'll give you some updated videos on these options as well, because I know it is highly requested and a lot of people want to know about options too. So until next time, guys, remember, don't time the market, buy the market. Peace.